Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone. So checking in on natural gas, the bears absolutely stole the show and drove natural gas into the ground. But it is time to start looking in the opposite direction for an oversold bounce. At this point, the hourly time frame is just looking like a very weak bounce attempt. This is not what I would be looking for. I need to see higher lows and higher highs. So the bulls have not proven anything just yet. But what I do know is that the RSI levels are telling us that an oversold bounce is coming. And that's because the hourly RSI was down in the single digits. We've got the 4-hour RSI. It's down in the teens. Bullish reversal candlestick attempting on the 4-hour. We've got the daily RSI. It's down in the, see here, we're at about 22. The last time the daily RSI was this low was back in February, where we had the bottom, the 13-year low was hit, and then we saw upside for months. So I'm not saying we're going to see this kind of bull move, but just looking what happened last time, in a few weeks, we saw very significant gains to the upside. I would not be surprised for the bulls to see a 10% move once we see the momentum shift and the bulls get some higher lows and higher highs on the hourly time frame, get some bullish MACD crosses on the 4-hour time frame. So that's a ways away from happening. This is a very early stage in the bounce, and we have not seen anything indicating that the bounce is coming now, besides these RSI levels. These RSI levels have me confident enough to start looking pretty aggressive for this bounce to play out. So in terms of support to be looking at, we don't have much. We broke this low. This was a must-hold 276. We now have broken the uptrend in all of 2016 that was underway. So we're looking down here. Let's zoom in so we can see it better, but it's those February lows where we are seeing a dip last February and a dip this February. The low was hit on February 26th. And that price was down at 2468. We still have a support up here at 2553, but again, there's not many support levels here from where we currently stand on the daily time frame. So the bears are in full control, but we know a short-term bounce is coming, and these levels, and just looking at the hourly levels, let's say if you're playing UNG, there's multiple ways to play this. You can play UNG or UGAS for the bounce, or you can play DGAS bearish. So UNG, the hourly RSI, let's see, we're still at 17 on UNG hourly RSI. For UGAS, that hourly RSI is 17 as well. And for DGAS, that hourly RSI is 82. So extremely overbought, looking for signs of weakness, and I would not be surprised to see it play out a bit overnight and give us a key setup in terms of supports to be watching as we head into tomorrow. The UNG on the daily time frame, big time gap down. Look at that volume. Highest volume we've seen in months. Closed down near the low. Daily RSI is 23. And we're looking at support now down at 643 and 636 because we broke must-hold support of 685. So this is actually a third gap down open on the weekly time frame, which does give the potential for a bullish 3-gap down reversal pattern as well. The main story here is that the bulls are due for an oversold bounce because the bears are exhausting themselves to the downside after seeing such a clear runaway with this. So we have been looking bearish on natural gas ever since we broke this little tight pattern. As soon as we broke 3169, the bears took control of that short-term pattern, and it's been nothing but lower highs and lower lows since then, and it's culminating here with a potential all-out dump climax before this oversold bounce begins. So here we are at 258, and to see a 26-cent move, we would be up in the 280s to be looking at a 10% bounce, and that's going to see, we would only have to get back 2 days worth of losses to see a 10% bounce. So keep that in mind. We are looking for an oversold bounce. We'll check back in tomorrow to see how this plays out. You do want to honor your stop losses and still play it safe, as you are definitely playing counter the trend when looking for this bounce. But I would give more wiggle room to my stop losses personally with the RSI levels as they currently are, because you have to figure where we stand on the daily time frame. You can be a bit confident here that even if I had to stay in a red position waiting for the bounce to play out for a bit longer, within a week or two, we should absolutely see those prices regained and a move back up into the 270s and potentially even 280s. So we're going to be watching very closely. I do like the potential risk to reward scenario setting up here. Certainly favoring reward from this point, and I will see you tomorrow. I appreciate you watching.